All right, what is up, traders? What's up, tycoons? Today's video, we're going to break down biotech. Now, XBI has exploded in the first half of the inverse bump and run. If you're not familiar with that pattern, we'll break it down. You could also say I had a little bit of an inverse head and shoulders here that we've seen fire off some really critical levels that we're approaching right now, and we'll break down why in today's video, as well as some of the potential upside targets and downside support that you need to pay attention to. And really, the most important thing you want to pay attention to right now when it comes to biotech is going to be treasury yields, interest rates, guys. Not too many people know about that. We'll break down the correlation. But if you take a look at the relationship between the TNX, okay, the 10-year treasury yield and XBI, you can see how closely correlated they are. And I'll break down that explanation for you guys in today's video and why you want to pay attention to those. And of course, we'll go over LabU. I know a lot of people like to trade this. This is the bullish biotech leveraged ETF. Always be mindful of the risks when trading leveraged ETFs. But we have a nice bottoming formation in the process here, and we'll see how things develop and go over everything in today's video. So be sure to smash the like button and subscribe to the channel if you guys are new. As always, though, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the disclaimer. I started a completely free newsletter for you guys as well called Investment Intelligence, giving out free trade ideas, free valuable finance content, and I try to send those to you guys once or twice a week. These are what the trade ideas will look like, highlighting the chart conditions, going over the chart and any patterns or signals itself that we see. Right. And you can see that this rising wedge here played out very, very nicely. Many of the trade ideas have worked out very, very nicely. And, I try to put high quality trade setups in there, which is why you only get 1 to 2 a week versus me spamming you guys with 5 to 10 different trade ideas every single day and then bragging about 1 or 2 of them working. Okay, I actually did just put out a newsletter on biotech like a week or two ago, breaking down the relationship between treasury yields and biotech. It was a really great read. All right, the newsletter is in the format of a blog, so there's also a website associated with it, and you can go back in the past and review the different stocks, the different trade ideas, and the different articles that we've written in that newsletter. If you want to, you can also sign up for the Investment Intelligence Discord. That's only $10 a month, less than a cup of coffee a week, and that's where you get access to all of the different trade ideas that we're looking at rather than just 1 or 2 from the free newsletter. We'll go ahead and get started in the video, and we want to talk about XBI. Okay. So if we take a look at XBI here, we had 2 demand zones. Okay. Remember the way supply and demand works, support and, resistance. We had support over here, demand, demand, demand. And, we basically broke through that demand, and we were cautious here on the retest to see if this was going to retest as resistance in supply and push down lower. And you can see we did a great job of consolidating here and pushing up higher. We also had this previous demand zone here, right, that we tested demand multiple times, and then here we ended up flipping it to resistance and breaking down lower. And so now, again, we want to be cautious here, and we'd look for something very similar where we consolidate a little bit, breakout, retest, and then push up higher. That's what we would look for in this demand zone here on XBI. If we can do so, the upside target is going to be around 86.78. That's also, basically the top of this trend line that we've tagged 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, almost 10 times, around 8 to 10 times on the daily time frame. Remember, the more times you test a level, the weaker it's going to get, right? And the odds increase of a breakout. All right. And if you're not familiar with an inverse bump and run pattern, basically this trend line right here is your prevailing downtrend. So we have this prevailing downtrend. We're putting in high, lower high, lower high, lower high, right? And then we have this aggressive bump down in price that we see right here. Now, this bump down is the bump of the inverse bump and run. And what we're seeing here currently, right? We got a very clean textbook breakout, retest, and push up higher. This is the run part of the inverse bump and run. And in a perfect world scenario, it's going to take you up to where the top of the pattern began. So the big barrier that we would have to face if this was to play out is going to be right around that 86.78 level. You can see that that also would align very closely to the top of that trend line. And if we can break out, flip 86.78 to support from resistance, it's possible we could even head up to 100, but we would have to make a pit stop around 97.50 first. Okay, so that is, basically your best case scenario right now. Now, you do need to be cautious. Okay, I know people don't like to hear that. We talked about how you need to be cautious when we're in this zone, and we need to be cautious here because not only are, we retesting an old area of resistance, look at how overbought we are on the daily time frame right now. We've gone up pretty much in a straight line, and so some type of a retracement would be very healthy, and that would be an area where we can look for a low and then a higher low. So it's not the end of the world if XBI does roll over and turn around, but you just want to be cautious. And as a general rule of thumb, typically when you're buying something that's very overbought, that's not really the entry that you want to be looking for, right? Over here was a much better entry. On the retest was a much better entry. Maybe even the initial breakout was a much better entry. And so if we break below 78.49, we've got 73.36. Those are going to be some key areas of support within those zones. And you do want to be mindful, right? We've got a gap down to fill here at 67.50. That's what this blue box is. These gaps, they tend to fill about 90% of the time historically. The big question is when, right? When do they fill? Sometimes they fill very quickly in days, weeks, and months. And sometimes they even take years to fill. So what I like to do is just chart them up, have them on my chart, set some alerts around there. So that way I can be present and be aware of when a gap is potentially going to fill in the near term. Right? Clearly, this was a runaway gap, right? A breakaway gap. And so we didn't even, come close to filling this gap. We just pretty much gapped up and just immediately ran away from it. So, that's a very good sign. We are above the 200-day moving average, but you want to be cautious because there's been many times where we've gotten above the 200-day moving average just for us to continue heading lower. Ultimately, if we can reclaim this and if this 200-day moving average can continue to flatten out and start to uptick, that's going to be a very bullish sign and signal for XBI. Now, we mentioned the relationship between Treasury yields and XBI and biotech. So if we take a look here in orange, we have basically got the inverse 10-year Treasury yield. Okay. And then we have XBI here in white. And so essentially what we're looking at, it being that we're looking at the inverse Treasury yield, as that goes down, it means that Treasury yields are actually going up. And so here recently, we've seen a complete plummet in Treasury yields, and it's not a coincidence that we've seen biotech absolutely skyrocket to the upside. Now, the big question you may have is why do Treasury yields matter for something like biotech, right? Well, the reason being is because biotech companies oftentimes are profitless companies that are looking and spending a lot of money on research and development, trying to get a breakthrough drug or some type of technology that ultimately they can sell for a massive profit upon FDA approval, upon regulation clearance, and things like that. So, if you think about a profitless company, well, if they're not making profits, how do they get their money? Well, oftentimes it's through fundraising and it's through loans. It's through different types of there's many different ways to raise funds, but in a super high interest rate environment, people are going to be less likely to make loans to profitless companies, right? They're more likely to make loans that are safer, okay, to companies like Apple or Microsoft that are churning out nice, consistent profits, okay? Even if those profits aren't growing massively, those are companies that are more likely to be able to thrive in a high interest rate environment. And so as we saw interest rates going down, remember on the inverse chart, if you're seeing this go down, that means that Treasury yields are actually going up. It's no coincidence that we saw the XBI itself absolutely plummet. And now we're in this environment where if we take a look at the 10-year Treasury yield, you can see we had this massive skyrocket to the upside, and we've started a very strong uptrend over the past couple months. Or I'm sorry, downtrend. And we've broken through our bullish channel here on the 10-year Treasury yield. So you do want to monitor 10-year Treasury yield and monitor Treasury yields in general if you are trading and investing in something like biotech. Now, 10-year Treasury yields are approaching oversold territory, right? So let's start using the whole big picture right now, right? We looked at biotech. Hey, it's in overbought territory. Generally, that's not the best time to go long when something is overbought. When we take a look at Treasury yields are getting oversold. Generally, it's not a great idea to, short something when it's at, nearing that oversold territory. So all of this to say that just because something's oversold doesn't mean it can't go lower. The TNX can go lower, and just because XBI is overbought doesn't mean it can't go higher. But just think about trade structure and how you want to set up things, right? Ask yourself, is this the best opportunity for me to potentially enter into a trade? Now, TNX is approaching areas of support. We broke through 4.187 and we're coming down here to 4.128. All right. And then we're also very close to the 200-day moving average, right? Being that we're approaching all of these levels of potential support and that we are very close to getting oversold, I really wouldn't be surprised if we see Treasury yields start to rebound and recover a little bit. Now, does that mean that they absolutely have to reverse? No, right? Rather, that just means that, hey, if they were to bounce, we're not going to be caught off guard for it, right? And we're going to prepare ourselves mentally or financially for the possibility of Treasury yields starting to rebound and how that could affect things like XBI. So when you take a look at LabU, okay, LabU is still below its 200-day moving average right here in blue, which is also coincidentally right at the 50% retracement level of 101.92. We have this old area of demand here, old area of demand here, and now we're going to look to see if this is going to act as resistance, right? Support, potential resistance right here now. And it would make sense, again, if we pull back and we start to see Treasury yields start to climb. Now, being that this is the bullish leverage ETF, it is still possible that this thing could come up to its 200-day moving average at 101.92, and that's going to be another area of key resistance. Okay, now big picture wise, look what this could potentially set up, right? Boom, a left shoulder right here, a head, right? And then a right shoulder right here. So if we were to break out, retest this zone, okay, and then hold that zone and push higher, that would set up an inverse head and shoulders right here. Now, what's also really nice is we've got this nice round bottom here, okay? We love looking at round bottoms in the stock market and as a trader. And so what you see here is, we have the potential here for us to pull back, maybe even to 73.64, and that would potentially give us an inverse cup and handle, right? Where we have the cup already, and that could end up forming a handle. Okay, so 73.64 will be a key area of support if we do break below 89.28, and above 89.28 we have 101.92 and 114.56. Those are going to be your key resistance levels up above. Now, if we break 73.64, just like LabU or just like XBI, there is a small gap down to fill on LabU, taking you below $60. So you do want to be mindful of that. And hopefully you guys enjoyed today's video. If you did, smash that like button, subscribe to the channel. Don't forget to sign up for the newsletter, Investment Intelligence, giving out free trade ideas, free valuable finance content every single week. You can sign up for the Investment Intelligence Discord using the link in the description below to get access to all of the different trade ideas, analysis, resources, custom scripts, and indicators that I have, for all of the members. And I'll see you in the next one.